Welcome back, everybody. Assalamualaikum warahmatullahi ta'ala wabarakatuh. As I promised in our previous video, we are going to continue with the part E of question 1 March 2017 exam. Just a little bit of overview of that particular question. If you look at the question, I hope you have the past exam question with you. The requirement of the question is to construct a schedule of the movement of the PPE. So you are asked to construct particularly the movement of property, plant and equipment. And in your previous FAR320, you may have noticed that this is also known as notes to the account, and this is actually notes on PPE. What you can expect is that in this question you are just asked to prepare for 1 year, one financial year. You can also expect a question that may ask you to prepare movement for more than a year, say 2 years or 3 years. Or alternatively, a question that asks you to prepare for a year, but that involve like 3 or 4 types of PPE. Let's say 3 types of PPE, but only to prepare the movement for just 1 financial year. So here you are asked to prepare for 31st of December. There are a few things that you may have to look at before you prepare the notes on PPE. So number 1, if you look here, you are given the information on 1st of January 2016. 1st of January 2016. That was the information at the beginning of a financial year. And if you look at the requirement, you are asked to prepare as at 31st of December 2016. Okay, let's start. So if you're asked to prepare for that, if you would see the beginning amount given here, you are given the balance of the PPE. At the beginning of the year, that was actually the balance as at the date. Sometimes it can be at valuation as well. So this is your balance brought forward. One is for the cost. Another one is the accumulated depreciation. Okay, so that one will be put in your beginning balance, or the balance brought forward for your PPE, which is cost and accumulated depreciation. And then if you proceed reading the question further, you would see that there are information in the paragraph. Yeah, that information gives you a few things that you have to take into consideration. For example, let's look at this one. Okay, the date is 1st of August, and you are informed that one of the component of the plan, so let's say you have one piece of plan and it was not replaced completely but only one of the component. So meaning that the remaining component are still there in the company, but somehow Expert Berhad is replacing just the one particular component. Why? It was replaced because it is hoped that it will be able to increase the production capacity. So when you look at the word to increase the production capacity, this means that it will be able to increase the future economic benefits of the company. And for that reason, the component that is being replaced with a new one, which is the new component, was 1.2 million. That new component is actually to be added to the PPE. However, when I say added, mean in the form of movement, that will be put under the cost section. So meaning that these are actually to be put in the cost. So in the cost section, so that is the movement of the PPE, you need to go and add to the cost section. And then you have another one. You have another one, which is the old component. I'm using a purple color here. The old component was being replaced, and remember just now the old component was being replaced to get the new component, but the cost of the old component that was bought back in 2014, so this is the date of acquisition for the old component, where the date of acquisition for the new component was actually here, date of acquisition, but the date of acquisition of the old component was on somewhere 1st of October 2014. 1st of October 2014 here. So therefore, this 700,000 is also to be included in the cost, but in the cost it has to be deducted, meaning that this is something to do with derecognition, also known as disposal. Whereas the first one that is being acquired, 1.2 million, that 1.2 million is the one which you consider as an addition or a new purchase, but not a new purchase of a completely new plant, but it was just a part of it that is being acquired, part of the so-called spare parts, component parts that are being acquired. And of course, this will give impact to depreciation because these are assets that are being depreciated. And you are also informed that this old component, the old component, this one that has a cost of 700,000, was being traded in. So that was a trade-in, and the trade-in value is this one, is 400,000. So if the carrying amount or the cost, is 700,000, you can still get that payment of 400,000 if you go and sell it to the supplier. that is supplying the new component. Then you are informed that the policy of the company is to depreciate the plant 10% per annum. 10% per annum. And this is on straight line method yearly basis. So if you can still recall in our previous video, yearly basis means what? No depreciation in the year of disposal, meaning that for that 700,000 that was disposed, the old component, there is no depreciation for it. However, when it was bought in 2014, 1st of October, you charge full year depreciation. And then for the new component, new component, remember we have the new component, this one, the one that is purchased on 1st of August. Even though it was not with you for one whole year, it was just with you for just 7 months, you are going to charge full year depreciation. Before we can construct the schedule, right, or the movement of the PPE, look at the year end. So you just asked to do this for 31st of December. So when we say 31st of December, it starts on 1st of January 2016. And this is just going to be for what? For the plant. Yeah, okay. That is for 5 months. So let us look at how do we work it out. Okay, I hope you can have a clear view of the question at the bottom there. I'm putting it at the bottom because I want to show the working on top of it. Oops, sorry. It feels quite awkward when there's no audience in front of you and you're talking to your phone. I'm talking to my phone. Yeah, but that's the choice that I have at the moment. Let's look at what happened to the first situation here. So let us look at the new component of the plant that was purchased. So you have on 1st of August, yeah, 16. And you have the new component. I'm doing this working so that it can help you with doing the movement. This is a new component of the planting purchase. Alright, and the new component, the total, remember the total was, the amount was 1.2 million. If you can check the second sentence in that paragraph, 1.2. And earlier I did inform you that there is a trade-in value of the old component. So meaning to say that even if you have to pay 1.2, since you are selling your old item, so they are willing to give you some cash back or you don't have to pay, and there is a trade-in allowance given for the old component, and that was 400,000. So meaning that the one that you need to pay maybe additional cash payment needed is going to be 800,000. And this 1.2 is the one in terms of journal entry. The point is we're not going to do the journal entry, right? Okay, but what we're going to do is that this is the one that is going to be included in the movement notes to the account. So basically, in terms of the movement in the notes, this is the one that you need to go and add to the cost. So I put here cost plus. Okay, the next one. And remember to charge depreciation for this 1.2 million. I remember our target is to prepare the schedule, right? So the second part is on derecognition. Derecognition of all component. So I write it here. Derecognition of all plant. So if you want to derecognize, remember you learned this in FAR320, where if you want to derecognize, it can either happen during disposal or when there is no more future economic benefits expected from the use or its disposal. So here is when they derecognize through the so-called exchange of a new asset with the new one, but not totally the whole asset, but it's just the component of that asset. So the new part is just the component, but the asset is still the existing one. Just like you are talking about, you have a MyV and you're just trying to derecognize the engine part. So the replacement is just for the engine part, and you are replacing it with a new maybe Toyota engine into your MyV, right? So that's the thing, but it's still that MyV that is running or on the road, but the component is the new one is the engine. Okay, we go back to our question. The old component was purchased on, so cost of the old component. So we need to look at when is the cost that you purchase it. So it was purchased, a cost that was on the date that you purchase is cost of the old component on 1st of, you purchased, when was it? 1st of October. So just do a little bit of erasing here. Oops. 1st of October, you purchased it in 2014. And that was initially 700,000. And of course, from 1st of October until the day you dispose, which is on 1st of August 2016, yeah. So the date of derecognition is on 1st of August 16. Yeah, look at this. This is date of disposal for the old plant. So the accumulated depreciation would have been charged from 1st of October 14 up till the date of disposal. However, since we are talking about an asset that has yearly basis for depreciation, there is no disposal in 2000. There will be no disposal in 2016. So you're just going to look at until 31st of December 15. Okay, so meaning that for 2 years, because in 2014, regardless that the asset is with you for just 4 months, but you are going to charge full year depreciation. So what we will do is we're going to take 700,000 times 10%, the percentage, times 2 years. 2 years, 2014 1 year and 2015 1 year, regardless how long is it in that year. So you charge full year depreciation. So you'll get 140,000. There are no depreciation charge for that asset in this year of disposal. So on the date of disposal, carrying amount on 1st of August 2016 is 560,000. And if you look at the trade-in allowance, if you can still recall, trade-in allowance, you can just look at the top part there. Trade-in allowance, it was 400,000. So I put here 400,000. And therefore, the difference here, which is, how much is it? The difference of 160,000 is your loss on disposal. So the loss on disposal is 160,000. Loss on disposal. Okay. So this part here is the one that you recognize. So therefore, that one will have to be eliminated or removed from the cost of the PPE. So you have to deduct. Same goes for this depreciation. You also need to go and eliminate from your accumulated depreciation. You need to go and eliminate. However, for the new asset, that is the 1.2 million, not the new asset, the new component, you need to charge depreciation. Okay, if you want to make it easy, what we will do is we will first calculate the depreciation for the item. And our item here is to look at the depreciation for your asset, and your asset that we're going to depreciate here is plant. So we're going to calculate also the depreciation. So what we can do now is we can now look at what we have here, where we're going to put what we have put here into our format, which is our schedule. So let's do that. Okay. I have with me the answer, and to make things faster, what I'm doing is I'm going to put the answer here, and as I put the answer here, I'm going to also explain the journal entry. And also looking at what are the carrying amount of the asset as at the end of the year. Just wait for a while. I'm trying to find the answer. Okay. Just a little bit earlier. So this one would be March 2018. But if you look, this is part D. Before we do that part, you would see that the balance at the beginning that was given in the question, page 3, the cost part was included here. right? You can check the answer. Okay, I'm using red. Okay, balance here is from the question. You can get it from the question. I put here Q, here also from the question. The addition is from our working. Remember, I have already produced the working much earlier, and this is the one for the new item. Working, remember we do the working and the working for the new component. And that is being included there, right? So you buy a new one, so that one is to be included, the new component. The one which is the being deducted there is the one that has to do with the old component. So this is the derecognition of the old component. I'm just putting some explanation. You don't have to do this in the answer. Addition is the one for the new component. So what you buy, you add. What you dispose, you will deduct. And you can see that at the end of the year, the cost is 24.5 million. That is the one that you will calculate your depreciation, meaning that your charge for the year. Okay, that one we'll do in the workings here. And then the next one is the one for accumulated depreciation. So this is from the question. And this depreciation charge is by taking this, yeah, and times 10% times 1 year. The reason is because we are using yearly basis. Okay, you get 2.45 million. You don't have to spend time so much doing unnecessary working. Yeah, if you are talking about doing this in the final exam, don't spend that much time. You try to focus on what is required, which is just the movement. So if you can skip certain working, you skip. You just focus on what is required. Okay, the next one. The derecognition here is not the derecognition of the cost, but this is the derecognition of the accumulated depreciation. Remember, we calculated depreciation much earlier, and I told you that you need to provide depreciation from 1st of October up till 31st of December 2015, and that figure that we calculated was 140. In terms of derecognition, when you derecognize an asset, it's not just that you go and hand over the so-called component physically, but also you need to go and take out or remove or eliminate your accounting record related to it, meaning that you need to do some adjustment to it. And when you do that, previously you provide depreciation. So now those depreciation that you have provided from the day you purchase will now need to be removed up till the year before disposal. Why? Because this is yearly basis. So you remove that. So when you remove, you are going to remove from the depreciation. Remove means to deduct. So at the end of the year, that will give you the accumulated depreciation of 15,710. So if you take 24.5 million minus 15.70, you will be getting the figure that you can see here, which is 8790. 8790. So I've already removed that part. You can check that here. Okay. I am going to give some bonus answer now. This bonus answer is for the journal entry. For those that may not be able to do it straight away like this, you can also do the journal. So remember, we purchased the new component. So the new component that you purchase will increase your asset. So that 1.2 million will have to be debited. And that was in exchange for your old component. So the old component of that plant to the cost of 700,000 or 0.7 million may have to be credited. And remember, when you purchase that particular new component, you also need to pay some cash that I mentioned much earlier. And the amount, if you check back your working, you would see that the additional payment amounts to the cash payment of 800,000, so 0.8 million that you need to go and give to the supplier. Because you dispose the component, the depreciation must be removed. So depreciation, if you provide depreciation, you debit depreciation, you credit accumulated depreciation. But this one you are trying to remove. So when you remove, you debit your depreciation. So this is the depreciation for the old component that you remove, not the whole PPE, okay? The old component. So that was 0.14 million or 140,000. And because of that action to derecognize or to replace, aka to replace the component, it will result in a loss. That loss on disposal, which is going to be put in the SOPL, is when you compare the carrying amount with the trade-in allowance. If you can recall, that one was done much earlier, and that was 0.16 million. So whatever you have here, the one that you debit is the one that you plus the cost, for example, here. The one that you debit is an accumulated depreciation, right? You minus to the accumulated depreciation. The loss, there is no journal entry that relates to costs or to the accumulated depreciation, because journal entry for loss was just to debit to the SOPL and credit your disposal. Okay, next is the cash. So cash will not affect your PPE schedule. Why? Because cash is the one that you debit or credit to your bank, and that will appear in your SOFP. But this one, yes, this will be in your cost section, and you are going to deduct. So, and on top of that, there will be one more journal entry, which is the journal entry for depreciation. Depreciation is the depreciation based on the new carrying amount. Depreciation, the new carrying amount was 24.5, so there will be depreciation, credit accumulated depreciation. Because that you credit accumulated depreciation, and your amount will be 24.5 million times 10% times 1 year, and that gives you 2.45 million. So you debit to the depreciation 2.45 million. Because of that, that will have to be added to your accumulated depreciation.